Currency space, and the Indian rupee has declined for a second straight day today, closing at 54.46. Late slide in the India's domestic equity markets and a decline in the euro is weighing onto the Indian currency. For more on rupee, we are now joined by Manish Sanawala. He is Director Greenback Forex Services and he joins us in Mumbai. Manish, hi, welcome to the show. What are you making of all the reforms that Indian government is possible or is able to go through with, and what are the kind of cues you're picking in from the international markets as well?
Good evening, Manisha. And well, I think reforms are good. They are getting executed, but we have a problem, which is our trade deficit, and it's really large now. The market data in industrial production was good this week, but market really didn't react. Plus, we had three issues this week on the capital market in the primary space, and I think the biggest one was Bharti Airtel, which just closed. With the issue closing, I think expectations of flows ends, and I think we'll go back to probably 55 levels. And you know, as I said last time, I did see rupee appreciating down to probably this 54.20 levels, and I continue to reiterate that all dips are buys, so keep buying. And even if you see 53.80, I would buy.
What are the kind of cues, Manish, that you're getting in from the international markets as well? The FOMC meeting is done. We did see a knee-jerk reaction in the global markets and the emerging currencies yesterday, but today it really has been quite on the dampening side. How would you want to take those cues?
On the international markets, I would say that euro continues to be range-bound. I really don't see it move beyond maybe 35. Year-end, typically we see euro buying happening, and which is what we have seen now. Plus, on the dollar side, you had the Fed saying very clearly that interest rates are going to remain flat until unemployment drops below 6.5%. Very unusual, but we had a very, very clear numerical target by the Fed this time. Very interesting though. And the interesting currency right now is yen. So this broken out of the patterns and really broken higher, and probably, you know, yen now targeting 85. And I think that is where the excitement is, and you would see good movement happening in dollar yen now.
Your point is well taken, Manish. Vijay, getting you in the conversation as well. The way the rupee has been moving, 54 not breaching. I mean, I think the best we saw was 54.17 in the recent many sessions there. What's your sense coming in for the currency?
Manish, I completely agree with you, and I had talked about 54.20 being a support for the USD INR in this week itself. And on the outside for the month of December, I think I would stick to my view of 53.60 as the maximum potential for the rupee to appreciate. The long dollar short rupee trade is not completely reversed. It's just on hold at this point in time. And if you see any development on the fiscal cliff on to the positive news outcome of a rapprochement between the Republicans and the Democrats, I think the dollar will show significant appreciation. On the depreciation of the rupee, I think 55.5 level on the currency derivative segment on the NSE still remains a threshold to watch out for. It's only above 55.5 that the long dollar short rupee trades come back into vogue again.
So clearly the fiscal cliff is not, the agreement on that is not going to happen till before Christmas. So Manish, taking that cue, how would you want to trade rupee for the rest of December now? And if the fiscal cliff agreement does go through the next quarter, how would you range the rupee?
See, whether fiscal cliffs happens or not, or whether there is a resolution by 26th or not, I would definitely look at you know, buying on dips, because the markets are going to get very thin now. Going forward into next month, probably January you could see inflows. So probably Jan, Feb, we may be again range bound, move dip below 54, maybe 53.80, 54.60 possible. But going ahead, we have a budget coming up in February. So around in February again, I would see rupee trying to move back up, and we could see a 55.50 level again retested. So I think very broadly for the next 2-3 months, trade a range of say 55.80 to 53.50 again, I would say at the current levels, dips lower, buy on dips. I'm very, very bearish and I sound bearish, but
You sure do. Okay.